Hey, welcome back to the Mining Pod, joined by Matt Kimmel of CoinShares and myself, Will Foxley of Blockspace Media. Charlie Spears is off this week. He is in Hong Kong for Bitcoin Asia, having some great conversations and panels over there. So we look forward to seeing Charlie again next week. We're going to start with the difficulty drop, then go over to Texas and talk about how it's already heating up down in Texas, which has implications for the Bitcoin mining down there. Then go over to talk about ASICs, Canaan or Canaan, depending how you want to say it, just announced a new unit. And we'll finish up with Arkansas's mining bill. It's happening over there, a little geopolitical storylines, and finish with some AI pressure. AI pressure meaning like these AI guys, they want the same rack space as Bitcoin miners. So we're going to dig into that.
What a lineup.
Yeah, what a lineup.
The so-called light week in the space. And we got
it was kind of a light week.
Lineup.
Felt like a light week. And then you read in some of these stories, they're actually pretty important ones under the water. And that's what we cover here.
That's what we're about.
We're not going to shill your mining stock. We're not going to make you feel good about your investment. We're here to talk about the Bitcoin mining network. Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
So we'll start with this one, Matt. We saw a difficulty drop for Bitcoin, about 5.5%. We went from about 88.1 trillion difficulty to I think around 83 trillion difficulty. If you're watching this on YouTube or on CoinDesk TV, you can see it in front of you. But for those just listening, the chart goes down as hash rate has also gone down over the last few weeks. Matt, can you walk through difficulty really quickly, and then let's dig into why hash rate is dropping?
Difficulty is how hard it is to basically produce a block and get paid for it with new supply and transaction fees on the Bitcoin network. We use energy to produce hashes to sell to the Bitcoin network in hopes of discovering a block and earning Bitcoin rewards. The difficulty adjusts on a 2016 block cadence about every 2 weeks at an average 10-minute block time. And so we just had one. We just had an adjustment. This is the heartbeat of the Bitcoin network that keeps the block time and the predetermined supply schedule in place. It's arguably the largest innovation that Satoshi had was coming up with the difficulty adjustment. But that's a conversation for another day. We'll stick to this difficulty adjustment. And I guess my takeaway from this is that this is more common post-halving Bitcoin mining behavior than what we saw a couple weeks back, when there was like a ridiculous amount of fees and the price was booming. Now we're basically in a period where fees have been pretty much flat. Bitcoin price has been chopping back and forth. We're actually starting to feel the effects of the halving and the block subsidy basically being cut in half. We're seeing hash rate come off the board. We're seeing hash price come off the board. And I looked up some stats actually from the...
Whoa, you can't prepare with stats today. Look at that.
Let me consult my notes on this one, Will. The last halving, May 2020, the network hash rate fell from about 120 down to 94. The hash rate now has fallen from about 640 to 600. The first difficulty adjustment following the May 2020 halving was minus 6%. The one that just happened overnight at the time of recording, this happened last night, was about 5.5%. So it makes a lot more sense, I guess, in historical context. And the same is the case for hash price. So the big fee holiday that everybody got from the Runes launch, it's over, folks, and we're back to kind of normal network behavior. That's my takeaway.
Rune tokens aren't even doing that well either. I'm seeing a lot of trading chats, and they're lamenting their Rune purchases. But miners, of course, by facilitating Runes, they gotta pick up all the fees in Bitcoin, so they're doing pretty well. We're taking a look at Hashrate index here. This is a tweet from them this morning. Classic breaking tweet. 7-day Bitcoin hash rate falls to 579 exahash, down 11.3% from its pre-halving peak. So we're definitely seeing a drop in hash rate. I think the Miner Mag also had a great newsletter this morning talking about like this was the equivalent of 7 million S19 Pros, something like that. Should I fact check myself on that really quickly? Or does that sound correct?
I don't know. That's quick maths.
Let's see. The amount of hash rate decline is equivalent to more than 700,000 Antminer S19 Pros. So a little bit different than 7 million. But that is still a lot of units going offline. Of course, this is a lot of less efficient units. The conversations I've had, and we'll have some of these actually on the mining podcast next few weeks, is that if you're not below 35 joules per terahash, you're really swimming right now, like having a hard time treading water, so to speak. You want to be around that 25 joules per terahash, where we've seen a lot of these public miners go towards. Okay, we'll end that segment, and then let's go down to the state of Texas. We're getting into the summer months, and this is important for Bitcoin. Why? Because there's so much hash rate down in Texas, and whenever we see energy prices fluctuate in Texas, that means that there's implications for Bitcoin miners. Yesterday, we arguably saw one of the first instances of when energy prices spiked and potentially could have caused some Bitcoin miners to turn off. We don't have any headlines. It's very hard to backtrack that information from the network data, unless there's like an acute phenomenon like we saw in December of last year. But here we do see that the forward price of energy in Texas briefly clipped up to $5,000 per megawatt hour for a moment. All through this last week, it's been like jumping around a lot. And so what does this mean? Well, ERCOT has its own independent grid. It's kind of like both a quasi-government business grid that's very different from the rest of the United States. It's its own grid. And they operate their grid on a free market. So you can buy energy from the grid if you are wanting to purchase electricity. And you can also send electricity to the grid as a generator and earn income from anyone who's plugging in. They basically limit how much they price things up to $5,000 per megawatt hour. And so if you see it jump up that high, that means like there was a huge stress of it on the grid where like all of a sudden they needed more capacity to be brought online. And if it drops, that means either that moment was over or additional generation was brought back to the grid. So for Bitcoin miners, why does this matter? Well, they often turn off during these moments of acute stress when the price goes up, because you're not going to be making $5,000 per megawatt hour. The people who are going to be purchasing that cost electricity, probably nobody, honestly. That's really expensive electricity. But they're going to be people with more money than Bitcoin miners. Bitcoin miners are purchasing electricity at far lower rates than that. I'll throw it over to you, Matt. I thought this was an interesting story as we go into the summer months and we see more of this occur.
Yeah, it's reminiscent of the seasonality in China from the rainy seasons, right? We could very well see hash rate seasonality now that a lot of hash rate has entered Texas. We started to see it last year. It was highly profitable strategy for some mining companies to participate in grid response programs and direct their energy instead of making it produce hashage, but to the grid and sell their energy that way. I will concur. As someone that's in Texas, it has been over 90 degrees Fahrenheit, very hot the last couple of days. I think it's a little over 30 degrees Celsius for our global listeners. And that's hot. We're starting to get into it. This is kind of the beginning. And what does this do for the rest of miners, right, that aren't participating in these programs? The more that the grid response programs are participated by some of the really large miners, it takes hash rate off the table. Difficulty goes down. It really boosts everyone else too. That's a little bit of a exciting time that everybody gets to take a little piece of, get a little bit more profit.
Yep. So we'll watch this story. I'm expecting July, August to see more of these stories. We might even be doing some write-ups on this kind of topic because energy and Bitcoin mining are intimately linked.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Okay, toss it over to you for the next story about Canaan.
Yeah, if you're a fan of the Canaan miners, get excited. I think that's about 5 to 10% of you maybe out there. The Avalon 15 series has been released.
What's like their name? So like we have the Mara Pigs, the CleanSpark Sparkies. Recently saw the Riot Gorillas. I don't know if that's a sanctioned name or not, but I have heard that on Twitter. Do we have one for like Bitmain and like MicroBT? Do we need to come up with like the animal names for them? Like
I think we'll table that conversation and let us know in the comments.
The Canaan Kings.
The Canaan Kings. Well, the Canaan Kings should get excited, Will, because this new 15 series model, it is advertised to be at 18.5 joules per terahash, an efficiency level that's in the same ballpark, at least as the M60S series and S21 series of MicroBT and Bitmain. Slightly less raw power in terms of actual hashes. This is advertised to be at about 185 terahashes, while the others are more like closer to 200. I don't know actually what the ticket price is on this. I don't know if you caught that, but this is definitely Canaan trying to remain competitive, keep their hat in the ring, and compete with MicroBT and Bitmain, which have really dominated the market in the last couple of years.
Yeah, I'll take a look at this Bitmain unit, which is like, for whatever reason, really zoomed in on their website. But the important information is over here on the specifications for the S21 Pro, which they announced somewhat recently, I think in the last few weeks. And so congrats to Canaan for getting a new unit out. What does this mean? Not to throw cold water on a very cool product launch, and not to throw cold water on the importance of having a more diversified ASIC manufacturing base out there. But a lot of these ASIC manufacturers are trailing Bitmain. We need a name for Bitmain now. I just want one. Like Bitmain Bats doesn't work. It has to start with a B, but I can't think of anything. Anyways, I digress. S21 Pro is supposed to be coming out very shortly, with they're taking pre-orders in Q3 and Q4. This unit is a beast, like an absolute beast. Down to 15 joules per terahash is what they're promising. 234 terahash. The price you can see in front of you. Expensive, yes, but compared to a lot of the units out there, and then the unit itself, you're competitive. And I think this is undercutting even a lot of new manufacturers out there. I didn't see the Canaan price. I'm sure that's kind of floating around Telegram channels, but I think like the general market structure people should know about is Bitmain is on top in terms of joules per terahash, in terms of terahash output per machine, and in terms of pricing, and everything falls below that. MicroBT with their WhatsMiner is probably next. I believe they only have like the M60 and the M60 Plus units out right now, and they also have some water-cooled units that are really competitive and people are doing some interesting things with. And then there's Canaan, and then it's everyone else trying to build out their units, like the Auradine, the Blocks of the world. Bitmain still dominates this. It's not going to change anytime soon, even though we still see people grumbling about Bitmain repairs or Bitmain warranty times, things like that. They're just the gorilla in the room. It's hard to beat them out.
I occasionally still hear echoes of the S17 hate and how much that model just broke down.
Well, I mean, I was in a chat this morning with some miners, and they're upset about the S19K because apparently there was some sort of short with it. And I only heard very good things about the S19K. I almost purchased a few myself because I heard they were so reliable. But apparently there's some bad batches, and that happens with these things. So like an insider's look into how these units are manufactured. Bitmain is pulling parts from different foundries. They're pulling the form factor, which is like the chassis in the machine, from different manufacturers in China and Malaysia. And then they're pulling the control board as well from different manufacturers. And they assemble these in, I believe, like 5 different warehouses, mostly in Malaysia at this point, after the China mining ban and also the Trump tariffs. They decided to like kind of move shop. So a lot of units are now produced out of Indonesia. And so you get different batches because you're getting all these parts from different places at different times. And some batches of very good units will just be bad, and they'll all be dead on arrival or have problems. Not all dead on arrival, but have a higher percentage of dead on arrival. And then other ones will be great. So that's why with the S19K, I only heard good things. And then I heard some grumblings this morning. And I think that's just where we're at. I think it's slowly getting better. But for Bitmain, it almost doesn't matter because like their tech is just so much further ahead. And if you're a large customer, you also get priority in terms of warranty repairs and things like that, if not have it on site already. So there is much to be matured in this market for ASICs, but it will take quite a while. Quick plug. Sorry for rambling, Matt. But we have 2 shows coming up that are really awesome on this topic. One was Sunnyside Digital, which is, I think, arguably the largest distributor in North America for ASICs. And they do a lot of other things like logistics and repairs. And then one with Compass Mining and Shannon Squires of Compass talking about a very similar thing, like how they're kind of seeing it as like a pretty large hosting provider in North America. So those 2 shows should give you the fill if you are into logistics for Bitcoin mining. For others, for you a little bit.
You didn't even recognize it on your tangent, but you solved your animal mystery. They're the 500-pound gorilla in the market.
No, but Riot's the gorilla.
Oh my gosh.
Well, I don't know if that's sanctioned. If anyone from Riot's listening would like to get back to me, I don't know if you guys have an internal animal.
Is it trademarked yet? They're a different market. They're a miner. They're not a manufacturer.
Yeah, but it's a small market, so we got to, we can't be stepping on each other's toes. We're all friends. Okay, let us go to Arkansas and talk about this mining bill. Did you want to grab this one as well?
I'm just going to go through a couple of the highlight bits here. So these bills have officially been passed. There's 2 of them. And I think the main takeaway is that they restore the kind of local government's ability to regulate mining kind of on their level, right? They specifically cite a lot the topic of noise, and it seemed to be like a pretty large concern for a lot of the politicians involved that were probably actually hearing things from the actual local counties. And I remember some news stories that we've covered, Will, along the way that actually touched on that. So the requirement is to either use liquid immersion or completely cover, a little bit vague there, your air-cooled equipment. There is an exception, I think this is important, if you're within 2,000 feet of a commercial building. And so depending on where you're placed, this might not actually apply to you miners out there. There's an anti-China component to this bill, which is pretty fascinating. There's no ownership in these mines that can be from foreign parties, particularly calling out China, which is pretty interesting. There's bipartisan support for these bills, so there's no left-right kind of conspiracy going on here. And it was passed kind of on an emergency mandate. And so if you are in Arkansas, you got 90 days to comply. We wish you the best of luck. You should get on your horse. I want to call out Brian King, who actually said that these bills did not go far enough. And he lobbied for, wait for it, Will, get ready for this. Disclosure requirements before purchasing land to mine Bitcoin. Fees for excessive electricity use, again, vague language. And zero, absolutely none, use of Chinese equipment. I don't even know what to say about that. I'm just going to pass it over to you.
I think I found his Twitter account. So we will, this is definitely him. We will @ him later in a respectful way. But yeah, the gist of the story is that Arkansas pushed the right to mine bill last year, along with the Satoshi Action Fund and a few other groups, moved that forward. That was great because it did protect Bitcoin miners in quite a few instances because it was enshrined into law. But come forward a year, and a lot of these locals are unhappy that Bitcoin miners moved in next door, turned on their loud fans, and they didn't appropriately work with the community. It's a very old story. We've seen it time and time again. And so then these local communities talk to their state reps put these bills forward. That part's pretty vanilla, I think, and makes sense. And a lot of the good operators, this is not going to affect them at all. There's like some new rules around like how far do you have to be away from a zone, like a commercial zone or industrial zone or a retail zone, I should say. And then there's some new rules around like what kind of fans or how enclosed are your containers, things of that nature. The bigger thing here and the more interesting thing to me is a story that we actually picked up on in October when Dennis Porter of the Satoshi Action Fund was on the show, which is that we are seeing largely like an anti-Chinese movement against Bitcoin miners here in the States, typically in these more rural areas, because these states, quote unquote, don't like the CCP influence. Now, it's pretty unclear what that means. Like, what is the CCP influence? From my perspective, more as like a Bitcoiner and libertarian, I think anyone should have the ability and right to mine Bitcoin, regardless of who you are. And I often think that a lot of these Bitcoin miners who moved from China to the United States around 2-3 years ago are there to mine Bitcoin, just like we are here to talk about Bitcoin. And I think that they're unfairly maligned for that. So I did some digging into this as well with some personal connections that are in Arkansas. And I've heard that not only are Chinese Bitcoin miners looking to sell over the next 90 days, but even Taiwanese Bitcoin miners who are not connected to the CCP are selling because they don't want to be stereotyped. So I do think what we're seeing here is a prejudice being set against these Chinese Bitcoin miners. Certainly in some cases, there could be some CCP influence, or there could be some Chinese Communist Party involvement. It's very hard to know that, though. And it's also very hard to know, like, from the language of this bill itself, what that certainly means. Like, if you are like the brother of an official but have no connection to them, does that matter? If you're like, you know, have a family friend that's involved with the Communist Party, does that mean you're involved? Does it just mean that you have to have someone on the board of directors who's in the party? It's very unclear, and it doesn't seem to matter. Arkansas as well passed some legislation, I believe, a year ago that did something very similar for farmland, where they basically took all the farmland away from foreign powers. And I don't know if they redistributed it or put it up for auction or if it's with the state as of now, but it was fairly aggressive in terms of reclaiming land from foreign purchasers of this land. And they're doing something similar with Bitcoin mining. I think for the Chinese Bitcoin miners or even others down there who don't want to be involved now, there's kind of a fire sale. And we're already seeing a lot of site prices drop right now because of halving effects. And then it's compounded by the fact that a lot of these Bitcoin miners have 90 days to figure out how to sell their sites or readjust the contract so they're not like technically owners of it, but they certainly get some benefits from the revenue. I think it's a story to watch. I think this might bore some people because it's like, Arkansas, why do I care about this Bitcoin mining thing here? But these are like the front lines for Bitcoin adoption often. Like we think of it as like being maybe the Coinbases or the San Franciscos of the world, but Bitcoin mining is moving into communities next door. And if the community fights back for whatever reason, they don't like it, something to follow. Okay, any responses to that before we go on?
I would just say they're still testing the waters on policy, clearly. You highlighted it, but there was kind of the right to mine just last year. But they realized the kind of ramifications of that and the kind of upheaval among local citizens, particularly around noise. And so they're coming back and they're changing it. But this is precedent being set. And I'm happy at least that this is happening on a state-by-state level. The China component is pretty interesting. Don't get me wrong. But you covered that enough so we can move on.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine. Okay, let's go over to Bitcoin mining and AI. So we got this headline from our friends over at Bloomberg, David Pan. Shout out to David. He's a great reporter. Bitcoin miner Core Scientific converts data infrastructure for AI. Quote, Bitcoin miner Core Scientific is converting part of its infrastructure in order to power high-performance computing operations for artificial intelligence companies. The Austin, Texas-based company deployed 16-megawatt data centers for AI startup CoreWeave, which formerly was actually an Ethereum miner. It looks like they're going to move up towards 500 megawatts for AI. They're going to convert their chimney structured Bitcoin mines, which I've been to, they're pretty cool, towards AI. What does this mean? Well, I think in general it means that like a lot of these large Bitcoin miners who are on the grid they're going to diversify their portfolios, move into AI infrastructure that previously wasn't super investable because it wasn't really sure if the demand was going to hold up over time. I think for the smaller guys, this doesn't really matter much. Like the smaller Bitcoin miners are still kind of shuffling around with their containers looking for cheap energy. But for the large guys, like if you already had a site and you already have the purchase and you're locked into an agreement for that energy, like you basically are walking into a win-win situation. We have one other chart I want to show from our friends over at Luxor. They put this one into their Q1 roundup. And this shows Bitcoin mining energy demand versus potential future demand according to the EIA for AI. And it shows you that traditional data centers and AI data centers are going to increase drastically over the next few years. Bitcoin mining is still going to be a large portion, but it's not probably going to increase as much as these other sectors, just based on like historical performance and then sort of walking that out. Any thoughts on this chart or that headline?
Well, it's very interesting. We talked about when Core made it out of bankruptcy that they may kind of have a strategy pivot, and we're seeing that a little bit of them kind of entering a little bit more of the AI game. And it's a different game, right? Like you have to have really lock and key uptime requirements to be able to be the data centers for different AI companies and perform that service. And then you're also kind of up against other competitors, right? You're going up against the Microsofts and the Amazon of the world, some pretty large 500-pound gorillas, so to speak. But it's interesting to see like the just general projection also of data centers, right? Like energy equipment, like rack space, pretty sought after stuff that we're definitely going to continue to talk about and keep our finger on the pulse in the coming months.
When Data Center Pod or AI Pod, we'll have a suite of hardware and energy podcasts to accompany the mining pod. I think the one takeaway for me here is the conversion. It's going to take a while. So initially doing 16 megawatts with CoreWeave, which is certainly a lot, but moving towards 500 megawatts, they said it's going to take till 2026. I've been to these sites, like I've said. Bitcoin mining sites don't take that long to boot up. They're pretty simple. You can mess them up, certainly, pretty quickly. But compared to an HPC site, very different. So it's going to take a lot longer, be more CapEx intensive, but probably be more interesting to public stockholders who might want to purchase more Core Scientific stock because of this, because they're diversifying their revenue base. I think for energy markets, like the story continues as always. I was on the phone with an energy guy the other day. It's like, what do you think this means? I think Bitcoin miners continue just to find little cracks in energy grids where they can eke out cheap power. The story hasn't changed too much, in my opinion. Okay, we will wrap up there. Matt, anything before we head off for the weekend?
Let's do it. Let's get the weekend going.
Cool. Well, I got an announcement first. I'll be at Consensus with CoinDesk. We'll be doing some live shows there, and I'll be doing some other stuff as well. So if you are at Consensus and going there, let me know. I'd love to say hi to you. Probably bopping around, go to the Texas Blockchain Council's little party as well. So we'll be there. Last thing, go check out the Gwart Show and Bitcoin Season 2. There are 2 other podcasts on our Blockspace Media. If you just go to blockspace.media, you can find those shows directly on there. They're more crypto focused, more Bitcoin focused, but they're part of our podcast network now. Lastly, thank you to Damian Somerset for being the producer of the show. And thank you also to Nick Gates. Okay, we'll see you guys next week.